Remember, if you are an investor in gold, you're probably taking it on the chin right now because we are in a rising interest rate environment.
Jim, gold made gains after the DPRK's Minister of Foreign Affairs, Ri Yong-ho, warned the US that its jets could be shut down close to its border. Is it a good time to sell gold?
I think what you have to do is identify yourself as an investor or a speculator. If you're just a player waiting on the sideline, waiting for an event to take place, a highly remote event to take place, then this is probably a time to start exploring the long side and avoiding the short side, because we do have heightened problems in the Korean Peninsula that could escalate into a war. And so you have to know what you want to do with your money and what kind of player you are in the market. If you're someone who follows the markets every day and wants to make gold part of your portfolio, then you have to be aware of the fact that gold tends to follow interest rates, and interest rates really tell the whole story. The treasuries, for example, guide the rest of the markets around the world. So when we are in a tightening situation like we are with the Fed, then certainly gold is not a investment that you want to hold on to, because higher yields tend to make the dollar go up, and since gold is dollar denominated, prices tend to weaken because of lower foreign demand. Also, gold doesn't pay interest, gold doesn't pay a dividend, so it's not the type of investment that you want to have. So again, you have to go back to identifying what kind of player you are in the market. Again, if you are someone who sits on the sideline playing for a one-time event, then selling gold is not recommended at this time. Remember, if you are an investor in gold, you're probably taking it on the chin right now because we are in a rising interest rate environment. We have the Fed already tightening. We have the European Central Bank threatening to tighten next month, and the Bank of England is even on record saying that they may tighten. So this is not the kind of environment that is satisfactory for bullish gold traders.
What would happen to the price of gold if these words turned into full-blown actions?
Well, obviously we've seen what can happen on a small scale over the past 2 months. If there is a war, if war does break out between North Korea and the US or Japan or South Korea, I think you're going to see investors sell out portions of their higher risk assets like stocks and buy safe haven assets like gold, the Japanese yen, and the US Treasuries. Now, gold may not be the most favored asset because it is a clunky metal that you have to store and it's hard to move around. So traders do favor foreign currencies like the Japanese yen during these time periods of conflict. So gold will probably go up if there is a conflict, and that'll be because investors are pulling money out of the market, like the stock market, for example, and they need to park it somewhere where it's safe. And so that's why gold becomes popular. Now, the other thing that you're going to want to look at is you're going to look at how long the conflict is expected to last. If it's a one-time or short event, then you're probably going to just see short covering in the market. And so that'll be the people who are short, who are panicking on the news, buying back their positions. You may not see actual buyers come in for the long run because they may not believe that the situation is going to last months or years, and that they may not want to participate in it. So I don't think you're going to see panic buying going on if there is a conflict. I think you're going to have an orderly process, and you have to pick your spots. You can't just chase a market higher because there's a news event, and then when the news event goes away, you'll be left holding the bag at some pretty high levels. So again, you have to have some kind of a plan ahead of the event and then try to execute it as best as possible.
Do you think this gold surge will continue?
All right, we've seen over the last 3 months that the gold market has reacted to the upside on news of ballistic missile testing throughout August and September. And traders have also shortened the amount of time that they've reacted to this news. The first few times it happened, there may have been a rally in gold or a rally in the safe haven assets for about 2 or 3 days, and recently it only lasted 1 day. So I think investors are kind of getting used to the news, and it's no longer a surprise. So there'd actually have to be some kind of military action, some real fighting going on to convince traders that gold is going to go up. And then again, traders will have to reassess the situation, decide if it's going to be a long-term event, short-term event. There's some negotiations going on. It's one side beating the other. Is there a surrender? Things like that. Peace talks. So if there is no escalation or something doesn't look like it's going to last long, the rally may only be a flash in the pan and things will get over fairly quickly.
Well, thank you so much, Jim, for speaking with us through the internet today. It's been a pleasure. And thank you at home for watching. Don't forget to click, like and subscribe to Dukascopy TV for more interviews like this. I'm Kaz Kahil. Goodbye for now.